all that jazz.
Oh, Lord.
Yep.
Here we go. 5, 4, 3.
Good morning and happy Friday. This is Mark Jones, host of Key Factors Podcast, branch manager of Directions Home Loan at Cantera here in San Antonio, and co-founder of ReviewMyMortgage.com, the largest index of mortgage programs nationally. And this is your daily Millennial Mortgage update. So let's jump straight into today's interest rate. As I look, we are sitting at a average of 3.738, and this is within Texas at a credit score of 740 to 759. And as mentioned on a previous episode of the podcast, that is not our average in Texas. We are actually sitting somewhere around 676, so your Texas average now jumps to 4.299. So as mentioned before, it's super important that you guys actually read the disclaimers, read the fine print so that you know what you're comparing and comparing apples to apples and oranges to oranges. So let's now dive into our article of the day. All right, so our article is brought to us by Maury Bachman, and it is entitled Mortgage Application Denied. Take these 3 steps and get back on track. So I'm just briefly going to go over the 3 steps that they're mentioning in this article, and then I want to give some good feedback on this. So number 1, boost your credit score. It takes a minimum credit score of 620 to qualify for a conventional mortgage, but some lenders can opt to set higher standards. If your credit is poor or fair, it could be the reason why you're being denied for a mortgage. Raising your score could be your ticket to getting your next application approved. Number 2, pay off some existing debt. Your credit score isn't the only number a mortgage lender will pay attention to. Your debt-to-income ratio is just as important. That ratio measures the amount of existing debt you have relative to the income. And as you might imagine, the higher the ratio is, the less likely that you'll be approved to borrow for a home, as that signifies you're already borrowing quite a bit. Number 3, get a side job. There's no single income requirement to qualify for a mortgage. That's because the income you'll need will hinge on the specific amount you're looking to borrow. But if you're able to boost your income with a side hustle, you may put yourself in a better position to qualify for a mortgage the next time you apply. Well, guys, I've got a lot to say about that, but it's not just me on this episode. On Fridays, we're actually going to be doing Friday with a Friend. Jody Trevino, what up, man?
What's going on, Mark?
Going well, and
Happy
it's
Friday.
Happy Friday to you as well. So you got to hear that article. What are your initial thoughts?
Initial thoughts are it doesn't make sense. Good attempt at providing information, but doesn't make sense. If you've been denied by another lender, you deserve it, and you at least deserve the opportunity to get a second opinion from another lender, because just like not all borrowers are created equal, not all lenders are created equal either.
That is a great point. And I, too, want to add a couple of things that I feel are almost misleading within this article. Number 1, it's not written by a mortgage professional. And I want to jump back over here so that I can just jot through these real quick. So number 1, they say, boost your credit score. 620 to get into a conventional loan. Well, guys, there's more than conventional options available for you. And I think that's where Jody's talking about. Get a second opinion, because if you're not being provided all the options that are allotted to you based on your criteria, your down payment, things of that nature, then you're doing a disservice to yourself by sticking with that. Number 2, paying off some existing debt. They are correct in saying that your debt is a big factor in this, but you guys aren't mortgage professionals. That's okay, but you're not knowing the guidelines behind it and what we actually do to calculate existing debt to income ratios. You could be wasting funds that you could utilize for down payment or even making your offer a bit stronger, especially in today's market. Number 3, get a side job. This one is, in my opinion, atrocious. Jody, Talk to me about that.
Yeah, so getting a side job essentially will do nothing for you as a borrower. We can't even count that income. I mean, maybe possibly it could be used for down payment, but definitely not for income.
Absolutely. And for you guys out there listening, if you're interested in getting a side hustle and trying to use those funds as income on your next mortgage application, you would have needed to have that side hustle for at least 2 years. That's not just something that you can go and pick up a side hustle and now all of a sudden that's the standard. Jody, thank you for joining me on today, and maybe we'll have you back next Friday.
Yeah, first Friday with a friend.
Amen. I love it. Okay, so before I let everybody go, I wanted to just briefly promote the podcast a little bit. We're doing this through osmosis, and it's growing pretty quickly. If you visit keyfactorspodcast.com, it'll take you to our landing page, which houses all of the links to get to Apple Podcasts, Spotify, iHeartRadio, wherever you digest your podcast material. But as I scroll through here, you can see pretty solid episodes. These are the topics that I'm having with other industry professionals. We get pretty transparent, and it's all educational, meant for consumers, mortgage professionals, realtors, all that are interested in getting educated. This is Mark Jones. This is also your daily mortgage millennial update, and you guys make today count. Separate yourself widely from the pack moving forward. That's something that you would be willing to have a discussion about.
Because they didn't get it.
They
were
probably
like,
didn't get it. Yeah.
So follow up with your clients.
5, 4, 3,